Before we dive in, hit subscribe so you don't miss new episodes.
Yeah.
If you find value, a quick like. It helps us reach more people. Let's get started. So, you're probably working in finance, right? Navigating those high-pressure situations where, well, decisions really matter.
Yeah, absolutely. Big stakes.
And in that kind of world, thinking about simple rules for life might feel a bit simplistic, out of touch, maybe.
It could seem that way initially, yeah.
But this deep dive, it argues that if you take these fundamental principles and reinterpret them strategically, they actually become vital for, lasting success in these really demanding fields.
Exactly. We're not talking generic self-help here. Not at all.
Okay.
Today, we're getting into a really sharp piece called Rules of Life for Professionals in Finance, the Magnificent Seven.
The Magnificent Seven. I like it.
Right. And think of this as like an accelerated path, a way to grasp these core principles tailored for people excelling in capital markets, enterprise tech, private capital, asset lending, those kinds of areas.
So high-stakes finance.
Precisely. Our mission, really, is to pull out the key insights, show how this piece adapts fundamental ideas specifically for top-tier decision-makers, investors, those high-net-worth individuals you work with.
Okay, makes sense. Because those general 7 rules of life, let it go, ignore them, give it time, they're a decent starting point, I guess.
It's offer a foundation, sure.
But for you listening, operating where the margin for error is just razor thin, well, those basic ideas need a serious upgrade, don't they?
A strategic upgrade. That's the key. Which brings us right to the Magnificent Seven, Rewritten Rules of Life for Professionals in Finance.
Okay.
These are really designed for the C-suite, for savvy investors, for those really discerning enterprise clients. The aim is fostering real personal growth for executives and driving that entrepreneurial spark, even inside big institutions.
So practical application within finance.
Exactly. So let's jump in. Let's look at these rewritten rules one by one and see how they actually play out in your world.
All right, let's do it. Rule number 1. It takes the original let it go and gives it this very finance-specific spin. Emotional baggage is an expensive carry trade, massive momentum.
Mm-hmm.
Now, that phrase, expensive carry trade, anyone in finance is probably nodding along right now.
Oh, yeah. It's a powerful metaphor, isn't it? Think about holding on to a losing position way too long.
Hoping it'll turn around.
Right. Hoping against hope. And that connects directly to dwelling on, say, a deal that fell through or a market downturn hitting your securities-based lending book or even just a really rough board meeting.
Okay.
Holding on to that stuff, it hampers your effectiveness right now. It's like paying interest on an asset that's just not performing. It's a drag, a costly carry trade on your mental energy.
Yeah, I see that. It's not just feeling bad. It actually impacts your ability to make the next decision, right?
Exactly. The source material really nails this, that lingering stress clouds your judgment, drains your productivity today.
So what's the move then? Just forget it happened.
Not quite forget. It's more about extracting the value, doing a quick, honest postmortem. What went wrong? What's the lesson here?
Okay, learn from it.
Learn from it, absolutely. And then this is critical. Consciously choose to refocus. Move forward with clarity. That mental space is precious,
Yeah.
Finite. You can't afford to have it tied up in yesterday's problems.
Mm.
Top fund managers do this all the time. They analyze the loss, look for the systemic issue, fix it, and move on. They don't brood over one bad trade.
Right. Strategic reflection, not rumination.
Yeah.
Got it. Okay. Rule 2 builds on ignore them, but makes it filter ferociously.
Mm-hmm.
Not every opinion deserves executive attention.
Ferociously. I like that word choice.
Yeah, it paints the picture. And I mean, the sheer volume of information, opinions, advice, it must be overwhelming for leaders in finance.
It's a constant flood. Opinions, unsolicited advice, market noise, competitor chatter. It never stops.
Mm-hmm.
So this rule says you absolutely need what the piece calls a sophisticated filter. You've got to be incredibly selective about whose input you actually let in.
And who makes the cut? According to this.
It's pretty clear. Your clients, number one. Your trusted strategic partners. Your core team, obviously. And really importantly, the insights you get from solid data-driven analysis.
Okay, so a tight circle plus the facts.
Pretty much. Because spending that valuable time, that mental energy on irrelevant criticism or getting sucked into what competitors are saying, it just pulls you away from the main thing.
Which is?
Delivering value. Building those key relationships.
Yeah.
Executing your strategy. Especially in fast-moving areas like, say, AI and finance or complex stuff like luxury asset finance. You can't afford distractions.
So encourage Honest feedback from the inner circle, but tune out the rest.
Ruthlessly. Encourage constructive dialogue, yes. But tune out the non-strategic noise. That mental bandwidth is one of your most valuable assets. Protect it.
Right. Okay, rule 3. This one contrasts with the sort of short-termism you often see in finance. It turns give it time into strategic patience is a competitive advantage master of the long game.
Yeah, this is a big one. A really important shift in perspective. Finance often feels like it's all about the next quarter, the immediate return.
Quarterly earnings calls, daily market moves.
Exactly. But building truly significant, lasting value, that takes time. Think about forging deep relationships with high net worth clients. That doesn't happen overnight.
Or closing complex deals across different countries.
Or implementing major tech like enterprise AI. These are long-term plays. They require vision, commitment, and, well, patience. It's like compound interest, right?
Yeah.
A fundamental finance concept, time plus consistent effort yields powerful results.
The article mentions things like careful portfolio rebalancing for institutions, or the deep due diligence needed in commercial real estate finance. You just can't rush those.
You absolutely can't. Rushing leads to mistakes, often costly ones.
But this isn't just about sitting back and waiting, is it?
No, that's crucial. Strategic patience isn't passive, it's active, it's deliberate. It means consistent effort, making smart adjustments, staying focused on the end goal, even when the payoff isn't immediate. That's how you achieve those really big, sustainable outcomes that short-term thinking often misses. Think about some legendary long-term investments. They probably looked questionable at first.
Good point. Okay, rule 4 takes on don't compare. It rephrases it as benchmark against your own trajectory. Your only true competitor is yesterday's you. That feels very relevant in such a competitive field.
Incredibly relevant. It's so easy, isn't it, to fall into that comparison trap, always looking at what the other firm is doing, what some other investor achieved, especially with social media and curated profiles everywhere.
Yeah, the comparison game is strong.
But this rule makes a powerful point. Real growth, sustainable success, it comes from looking inward, from your own progress.
So less focus on competitor league tables, more on your own strategic plan, your KPIs, your unique value proposition.
Exactly. Are you getting better? Are you innovating? Are you delivering on what you promised your clients, your stakeholders? Those are the questions. That internal check gives you much more actionable insight than envying someone else's highlight reel. Everyone's path is different, right? Every firm, every professional. Your impact is measured by your own progress on your unique journey.
Like refining your plan each year based on last year's results.
Precisely. Setting goals that stretch you based on where you were, not where someone else appears to be.
Makes sense. All right, rule 5 takes stay calm and dials it up. Pressure reveals character. Poise under fire is non-negotiable. Master your composure. Given the stakes in finance, non-negotiable feels right.
It really is. We're talking situations where huge sums of money, reputations, client trust, it's all on the line, sometimes in a single moment.
Yeah.
In those pressure cookers, staying calm isn't just nice to have, it's fundamental. Panic spreads, leads to bad calls almost every time. Poise, though, that signals confidence. It reassures your team, your clients. It allows for clear thinking.
The examples mentioned, like navigating wild market swings or those super critical private capital negotiations.
Or even a tech meltdown, like an AI trading platform going haywire.
Yeah. In those moments, everyone's looking to the leader, aren't they, for that stability?
Exactly. Your ability to stay collected, to manage your own response, can literally de-escalate the situation. It creates the space needed to actually solve the problem. And it's not about being emotionless, right?
Right.
It's about mastering your emotions, not letting them drive the bus when the pressure's on. Think about the leaders you admire most. Chances are their coolness under fire is a big part of it.
Very true. Okay, rule 6. This shifts it's on you to something more active. Radical ownership is your superpower, master, your agency. Sounds like it tackles blame shifting.
It directly tackles it. In finance, things are complex. Lots of moving parts, lots of people involved, so when things go sideways, it can be tempting to point fingers, right?
Blame the market, the regulators, the client.
Sure, but this rule advocates for something different. Radical ownership. It's the principle that, at the end of the day, you are accountable.
For everything, your actions, your team's performance, the final outcome.
Pretty much, yeah. The core idea is nobody else is coming to fix your problems. It's on you. Driving revenue, sparking innovation, keep clients happy, achieving success. It all comes back to your initiative, your willingness to own it and take action. that sense of agency. It's incredibly empowering. It's what you see in successful entrepreneurs, even those working inside large firms. They own the whole process, they communicate clearly, they find solutions, they deliver.
Taking the reins. Got it. And finally, Rule 7. This one reframes SMILE, which might sound a bit odd for finance, into cultivate strategic optimism, master your influence.
Yeah, it might sound a little counterintuitive at first in a field that's often seen as cynical or purely analytical.
Right.
But strategic optimism, as defined here, is actually a huge differentiator. It's not about being blindly positive or ignoring risks.
Okay, so what is it then?
It's about maintaining a forward-looking, constructive, sort of can-do perspective, even when things are tough. This kind of optimism builds resilience in you, in your team. It makes collaboration easier. It frankly makes you a more effective leader. People want to follow that energy.
And it affects clients, too. The article suggests approaching tricky situations like complex lending or big portfolio changes with confidence actually builds their trust.
Absolutely. That positive, solution-oriented approach can calm nerves, diffuse tension in tough conversations. It can actually open doors that a more pessimistic or overly cautious stance might close.
Interesting.
People are just naturally drawn to positive, confident energy. So cultivating that strategic optimism, it boosts your influence, makes the whole environment more productive, more successful.
So pulling it all together, this deep dive into the Magnificent Seven really underlines that success in finance isn't just about technical skill or capital. It's deeply tied to mindset, to these guiding principles.
Exactly. These rewritten rules, they provide a really solid framework, not just for getting by, but for genuinely thriving, for turning that intense pressure into peak performance, for building a career that has real impact. They're the foundation of those high-performance habits you see in top executives and investors.
Which leads nicely to the final thought from the source material, aimed right at you listening. What are your non-negotiable rules of life for professionals that guide your decisions and actions in your field? Definitely something worth reflecting on based on your own journey and insights.
A great question to ponder.
And just as a note, Forbes LeBrock, who wrote the piece we discussed, specializes in areas like luxury asset finance, securities-based lending, commercial real estate finance, and AI in finance. So if those are areas you're focused on, exploring strategic goals or portfolio needs, connecting might be worthwhile.
Good to know.
Thanks for listening. If today helped or made you think, hit like it tells the platform this content matters, and tap subscribe if you haven't already. See you next time.